Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Vivek Iyer and with me today is Ekta Batra. Good afternoon, Ekta. What a session we are having as far as the markets are concerned. Extremely topsy-turvy. We saw a bit of green at the start, but then what essentially transpired was that post the rupee weakness that we've seen quite a bit of a sell-off, especially amongst names, amongst companies that have dollar-denominated flow, both in terms of debt as well as income. So that's been the story of the day so far. Good afternoon.
Hi, Vivek. Yes, absolutely. The rupee hitting that 90-odd mark doesn't seem too far away now. So maybe that should come up for you. And let's see where it's at. Remember that the rupee hit 89.78 on an intraday basis. So let's see whether it will stabilize for the entire trading session. But nonetheless, these are top stories that we're tracking. Stocks slide after the rupee sinks to a new low. Autos and metals gain while consumer durables and realty drag. Midcap index nears the 61,000 mark.
VST Industries and Godfrey Phillips in focus. The government proposes to hike excise on tobacco products, including cigarettes. The excise on cigarettes will vary from 2,700 rupees to 11,000 rupees per 1,000 sticks.
Whirlpool of India slips another 7% today after the parent company reiterates its intention to further pare its stake in the India unit after an 11% stake sale last week to reduce debt.
Bank of Maharashtra slips from the day's high as sources tell CNBC-TV18 that the government is looking to sell a 5% stake in the company at a discount of slightly over 5% to its current market price. This is primarily to meet the minimum public shareholding norms.
Walkhart shares jumped 12% after the drug regulator US FDA has formally accepted its new drug application for Xenic. This is the first time the US FDA has accepted an NDA for a new chemical entity developed by an Indian company.
Well, those were the top stories that we are tracking at this particular hour. What we've essentially seen is that significant selling pressure across the broader end of the markets. A whole host of EMS names, whole host of wire and cable companies near the day's lowest points. Names like Polycab, KEI, all of them have cooled off significantly. Even a whole host of consumption names, names like Godrej Consumer 2, are now near the day's lowest point. But these names and a whole host of other stocks is what Sudarshan has on his radar. He's standing by the wall to take us through the mid-caps that are moving around in the session.
So while market has moved lower and has erased all the gains that we had seen in the opening trade, let's take a look at some of the mid-cap names that are buzzing in the trade. So I'll start with Walkhart, which had moved higher as much as 18%. Currently also it's up 18%. And this is on the back of US FDA accepting its application for antibiotic Xenic. Now, you'll say that why just after accepting the application, the stock has moved 18%. So basically, approval rate improves significantly once US FDA accepts the application. That's the reason you are seeing a big move in Walkhart. TVS Motor up more than 3%. Company has reported strong sales for the month of November. All the segments have seen a healthy growth. Total sales were up 29% versus our expectation of just in the range of 21 to 22%. Three-wheeler sales have seen a growth of as much as 150%. Next one, Hindustan Zinc. On Friday also the stock was up on the back of silver moving to record high. And today also the stock is up, currently up more than 3%. Lenskart has reported a strong set of numbers. Total revenue has increased by 21%. It was primarily led by international segment where the revenue has seen a growth of more than 30%. Because of that, stock is up 7%. Bank of Maharashtra is down 2%. Sources indicate that government is looking to reduce its stake, but mainly to meet minimum public shareholding norm. That's the reason stock is down almost 2%. Some of the other mid-cap gainers, IEX, if you remember, after appellate tribunal's order or say observations on Friday, the stock had moved sharply lower. It was down 3%. Now it has regained all the losses and currently up. It's one of the top mid-cap gainers, up currently 5%. Physics Wala is up with healthy volumes, up almost 10%. Paytm, on Friday, there was a positive brokerage note. That day also the stock had moved higher. It was a Goldman Sachs note. And today also the stock is saying buying and up almost 3%. All the mid-cap IT names have moved higher mainly after we have seen a sharp fall in the rupee against dollar. Rupee has hit the low of almost 89.78. And after that, we are seeing buying in all the mid-cap names, IT names, and Scientist is up almost 3%. Yatra Online, since the time its management had clarified regarding the CEO change, stock has been moving just one direction, that is upward. And today also it's up 5%. Some of the mid-cap losers, Mahindra and Mahindra Finance has 63 months. It's not falling in the trade, but just they are seeing profit booking mainly after a recent up move that both these stocks had seen. It should be Mahindra and Mahindra Finance instead of M&M. recent listed company, Excelsoft, Sudev Pharma, Vikrant Engineering, all the stocks are today down in the trade. Mainly we can say profit booking.
Okay, all right. Well, definitely a long list there, Sudarshan. Thanks very much for that. But let's talk about one of those stocks in focus, Walkhart, which is in focus because it is up around 18% The news behind Walkhart is that the US FDA has accepted Walkhart's new drug application for the antibiotic Xenic. Now, the new drug application was originally filed on September 30th, 2025. Xenic has now been granted fast-track designation by the US FDA, which means that they've assigned priority to Xenic for the NDA review. And the drug has has already been used in the US and India under compassionate basis on critically ill patients. The program was initiated by Walkhart all the way back in 2011, so it's finally taken so many years to get here. Now, the company has earlier indicated with regards to this particular Xenic antibiotic, which is under development, that the drug being manufactured will be by a third party in Europe, so hence there will be no sort of trade issues because, earlier there was fears of 100% tariff or, a tariff if in case you do not have a manufacturing presence in the US. Now, the peak revenue will be significant. They could see revenue of around 150 crores from Xenic in India. And like I mentioned, they've said that it's saved at least 51 lives in the past 1.5 years with this drug. Xenic's market size, according to the management, based on the antibiotic market in the world, could be around $9 billion globally. They could consider some partners in with regards to out-licensing when it comes to this drug. Now, what exactly are the analysts saying? The market size of Xenic, according to them, is around $1.5 billion globally. Walkhart will be a patent holder for Xenic in the US eventually, if in case it does obviously get approval. They think Xenic can probably even be around a $500 million product for Walkhart, and there is a 95% chance for Walkhart to receive approval for Xenic in the US based on their phase 3 data. Now, other companies with some association with NCEs was Glenmark, which out-licensed its ISB 2001 for oncology as well as autoimmune diseases to AbbVie. And we have Orchid Pharma also, where there was a particular drug which was discovered and innovated by Orchid Pharma, but it was eventually out-licensed to Allecra Therapeutics. So all in all, I think this would be the first instance of an Indian company applying in the US and, getting approval when it comes to an NCE, or rather at least being accepted for a new drug application for it.
So post that, you've mentioned, you've broken it down very clearly for us, almost $150 million opportunity is what you've mentioned. So clearly the street taking this positively higher by over 18%. Well, with that, we'll now slip into a short break. We'll get more on the markets and stock-specific action on the other side. Stay tuned.
We're both failed entrepreneurs. So
Welcome back. Well, let's talk about the technicals of the market now. We have Saumil Mehta, who's the head of alternate research capital market strategy at Mirae Asset, Sherkan, who joins in. Saumil, hi, welcome to the show. Well, let's start by talking about one of the big movers today, Walkhart, which is up around 18%. Would you be a buyer at these levels?
I think it's just around a very crucial level of 200 daily moving average. I'm pretty sure that the new uptrend has already started in the medium term outlook, and today if it closes above 1440, which is 200 daily moving average, it's a very good sign for the stock. Long-term charts are definitely intact, and I'll be looking for a very good rally from here. 1580 would be my first target in the medium-term outlook, and the next target is 1650. So these are the two targets, and on the downside, the stop loss would be a little deeper, 1380. But this looks like a new rally on the upside in the medium-term outlook.
Okay, well, Saumil, and what is your view as far as markets are concerned? Do you feel most of the corrective phase is now done, and where do you see markets headed from here on?
Absolutely positive on the stock, on Nifty, on Bank Nifty, both. I do understand that there's a little bit of cautious approach at this point of time because the markets have corrected a little bit from the day's high. However, I think this is a very good buying opportunity. Very crucial supports around 26,100 and 20 daily moving average is a very key level, which is 55,900. Sorry, 25,900. So these are the two levels. My target on the upside is 26,700, 800 in the short to medium term outlook. So buy on decline should be the strategy, and 26,100 holds the key here.
Okay. All right. Thanks very much for that. Somil, for getting us that technical call. But now, home and furnishings company Wakefit Innovations is set to launch its initial public offering on December 8th, comprising of a fresh issue of shares worth around 377 crores and an offer for sale of around 4.67 crore shares. Ritu caught up with the management. Listen in to a slice of that conversation.
I think when Ankit and I started about 10 years ago, we were both failed entrepreneurs. So every learning that has happened has been by following customers and what they wanted. Yeah. So if you really ask me about 2 or 3 inflection points, the first is we pioneered the 100-day trial policy for our mattresses so that customers could take it, try it in the privacy of their home, decide whether they like it or not. Yeah. The second big thing was to look at a true omni-channel experience. Yeah. So we were a purely online company, which is available on marketplaces and our D2C website. But about 3 years ago, we ventured offline in company-owned, company-operated stores. Yeah. That really gave a great experience to consumer. And our philosophy of educating them before they buy was a very big thing to be done offline. Okay. So these two were something that's very important for us.
And then what a way you've come. But, in this IPO, if you could give us some specifics. Your initial DRHP that you filed in June spoke about a 460-odd crore primary issue. That amount is now reduced as per your updated DRHP?
Yeah, the primary has reduced a tad bit because we had a pre-IPO transaction. Yeah. And we also changed some of the objects of the IPO. Okay. But it is a small reduction, barely about 30-40 crore. You will see the specifics in the document. Okay. But the overall size of the deal has increased because of the pre-IPO demand.
About the IPO, before we move on, both you and Ankit are also selling shareholders in the OFS. You're offloading about 12.8 million shares together. What kind of message is that going to send to investors? What would you want to tell them about how invested you are in the growth story?
I think more than the specifics of that, what is more important is that post the listing, we both still own a significant amount of company. I think it's closer to 35% if my memory is right. So we are here for the long haul. We have built it for the last 10, 11 years. My third venture, Ankit's second venture. For us, Wakefit has been our life's work till now. It's a very small portion given that it is a liquidity event after so long. But we want to continue doing this for a while.
Let's also talk about the proceeds because a large portion is going towards 1, your offline expansion and 2, your marketing expenses. I mean, rather than say, looking to build your digital channels or invest into the factories. So, what is the sort of thinking there? What are you trying to achieve?
Every company goes through its phases of different investments in different parts of its life cycle. So we have the Greenfield project that you see here. Yeah. It's one of the largest furniture factories in India. So during that period, a lot of the company's investments went there. Today, as it is scaling up, we need to invest in marketing. But as a company, we've always invested very frugally. Yeah. In the last few years, marketing has been between 8 and 12% of the overall revenue. So we've been very frugal, make sure that the company customer acquisition cost is low, repeat is very high. Yeah. And so we've never been a company that's reliant on marketing for survival. It's necessary, you do it. So even that, if you look at the amount that we have put in the IPO proceeds, it still amounts to the same 8 to 10% kind of a range. It's very, very sustainable as a company.
So, how do you project payback from the kind of investments you're making? Your losses have widened this year from the previous year to about 35 crores. What would you guide investors? I mean, while your losses have come down over the years, how soon before Wakefit is a fully profitable company?
So out of the 9 odd years that when we filed the DRHP, about 7 of them were profitable, EBITDA and PAT positive. The 2 years that we did go into losses was because of the huge investments we made into the Greenfield project. That was never existing in India itself by any company. So today we've reduced that completely. And you will see that even in the coming years, we will continue to focus on structural efficiency, ensuring that we are very, very frugal. So you'll see us, even when the full year financials come out, you will see that things will continue to improve.
Okay, let's talk about your omni-channel strategy because you're spending a lot of energy into going offline as well. You have about 130 odd stores already. What is the plan over the next 3 years? What is an ideal mix for the company post IPO?
The plan is to continue to open stores,
Okay.
but it is always going to be calibrated. We don't take a store opening target because that is a wrong incentive to give to the retail team. You will, in your hurry, you will choose the wrong micro markets, you will choose the wrong building because you're trying to achieve a target. So what we want to do is open a steady 3 to 5 stores every month. Make sure that they pay off very well. The payback period is very low, and you choose the right place, right building.
Yeah.
So that is the target. So it's not to open a X number of stores. In terms of the mix, we are not going to be measuring ourselves on that. We are going to be measuring ourselves on the own channel revenue.
Okay.
Because own channel would mean our D2C website and our stores put together.
Yeah.
Because consumers research anywhere, browse anywhere, purchase anywhere.
Yeah.
So we cannot just say that I will not be present here or I will drive transactions to a particular channel.
Yeah.
But what we do measure is as an integrated number of store plus D2C website, that should be large.
Yeah.
As of the DRHP time, that number was 55%.
Yeah.
Which means where our reliance on marketplaces is less.
Yeah.
Post that, if you look at the full year financials, that have gotten better. I'll be able to talk about the specifics once the RHP is filed.
Of course.
But that's improved even further.
What about the revenue mix as for products? You know, for instance, you started out with mattresses. That is more than 60% of your revenues. Then there's home furnishing and there's furniture. How will this mix evolve? I mean, what do you think are the fastest engines of growth for the company in the future?
Mattress has been our mainstay.
Yeah.
Like you rightly said, it's about 60%, but it's still growing in double digits. But furniture, given the small base effect, is growing way faster than mattress.
Okay.
So mattress continues to be a strong pillar, and it's a great way to acquire customers where they had the first experience of Wakefit, trusted, have a really, really good thing to share with their family, friends, and they become advocates. And then furniture comes into their life.
Okay.
That's the plan. And so if we don't foresee this to be one or the other, the flywheel is running because customers come back for more products. So that's why all of them will grow, but furniture is definitely growing way faster given that it's a smaller base.
But could you give us a sense of what the mix would look like, say, 5 years down the line? Would 5 years be 60%? Home furnishing is, I think, 11%?
You're right. Mattress today is about 60%. Maybe 5 years. 5 years is too far out.
Yeah.
3 years out, we think mattresses would drop down to about 55%.
Well, that is the management of IPO-bound Wakefit with our colleague. Now, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, now shifting focus, Vietnamese auto manufacturer VinFast is all set to enter India's EV market with the launch of its 7-seater limo green next year. My colleague Shivani caught up with the management on their plans going forward. Let's listen in.
Next car, it'll be the 7-seater limo green, and I think that is an explosion in the market. And I believe that that will give a lot of satisfactions to the customers. And because it's 7 seaters, it's family car. But more importantly, we have learned the lessons. I mean, the good lesson of the success story of selling this model in Vietnam. So we are going to launch both in Indonesia and in India.
Okay. On the point of the 7-seater, of course, India does prefer family cars a lot. Why not the VF9? Because that was one of the most anticipated cars when it came to Indian markets.
VF9 will come certainly, but our plan is that first we launch VF7 to position ourselves as a premium car maker. Then we launch VF6 for a family, and then for a limo green for extended family. And then we will see how's the response from the market. But down the line, since we are premium car maker, we would like to introduce VF8 and VF9. And even Lạc Hồng, which is the top model.
Well, that was the management of VinFast that's now entering the Indian market. But with that, we've completely run out of time on this edition of Midcap Radar, our special offering, Finding Alpha, when we return.